Okay, we all like yield playing stocks or paying stocks. We sometimes chase the same stocks, but that's the problem. So what are some of the good yield delivering shares that might be under the radar? James Dunn has done the research on such a topic and he joins me from our Melbourne studio. Thanks for joining us, James.
Good evening, Peter. Good to see you. And good evening, Paul.
Well, Paul will be shunted off soon, but listen, James, the reason why I got you on the show, in the Switzer Super Report, you actually outpointed me. More people read your article than my article, and I thought I've got to share this pretty good story that you came up with. Stocks under the radar screen that pay good dividends. Let's start off with your number one.
Well, look, it's worth looking at just the concentration aspect of the Australian stock market in this before we start, Peter, and that is, of course, that people go for the big yield stocks. They go for the big four banks, that they go for Telstra, and they have been going for BHP and Rio Tinto. And it's become a crowded trade, but it's kept delivering up until now. With well, when you look at BHP and Rio Tinto, it's not going to deliver anymore. But there's oodles of stocks, Peter, outside that top 10. So many profitable industrials that are doing reasonably well, and there's some very, very good ones that we should be looking at. And I think there's some interesting stocks. ERM Power was one I looked at, and the thing with ERM Power, it is moving to being a prime wholesaler of power directly to government, business and industrial companies. They've got about 20% of that market. They have their own power generation here in Australia, and they're also moving into the United States to tackle that business, starting off in Texas. But packaging power for government, business and industrial companies, and it's a good business. And they've just bought a company that does the software to show companies where their power usage is too big and not big enough, and the right places to buy it from. So they're really packaging themselves up as an integrated wholesaler of power to a specialist business, government and industrial audience. And that's on about 8.2%, Peter, and it's a good stock with a good business. As more of the business comes from the US, though, the full franking might disappear, but that's a very well placed stock.
Okay, let's go to the second one, mate.
IMF Bentham, which is the litigation funder. Now they've funded 175 cases in their history. They've lost 10 of them, of cases that have gone to trial. They're really starting to look at class actions. They're going to fund some class actions that'll deliver more of those class actions to them. They're joining in the class action against Volkswagen Germany. And look, Peter, they're trading at $1, and even if they maintained last year's dividend of 10 cents, you're looking at a 10% yield.
Yeah, historically, you make the right point. They've had a very high success rate. I guess some people worry about legal firms because of Slater and Gordon, but it's a totally different business, and they have had a very good strike rate. I think it was one South African court case they lost in recent times, but they've had a pretty good run, haven't they?
Well, they did lose 4 in the last financial year, Peter, which might have been their worst year yet. But 10 out of 175, and look, some of those are settled before court, but so some of them don't even reach the contested situation. And look, litigation funding is a business that you can't be certain of, but they are very good at it, and they're opening up some new angles of business, both geographically and also with class actions, and as I said, providing the funding for law firms to investigate class actions, which of course more of those investigations could actually turn into fundable cases that IMF Bentham can run.
Okay, number 3.
Well, they're not really in any order, but GUD is another one, and MG Unit Trust, which is that's the listed vehicle through which you can participate in Murray Goulburn. You can't be a Class A shareholder because those are only limited to the growers that supply them with milk. But MG Unit Trust is an interesting one, Peter, because people look at Fonterra in New Zealand and think that the milk price is going poorly, but MG, Murray Goulburn, which is our largest exporter of dairy products, it's really, the story here is a company that's moving more of its business to value-added products such as fresh milk and packaged cheeses, etc. It's almost getting up to about 70% of its earnings coming from value-added products, and with the free trade agreement into China, Peter, it just gives MG Unit Trust more of a kick along, and that's another one that's you can look at an 8% yield. So that's a stock that is in a growing business into China, supplying it with dairy. And the last one we looked at, Peter, was GUD, which people have often viewed as, well, Sunbeam, the appliances, and Ryco, and Oates, the cleaning products, etc., etc. But it's really changed too. It bought BWI, which is automotive aftermarket in lighting and battery power products. And they'll be getting on now for 2/3 of their earnings coming from the automotive aftermarket. It's a much more stable business. And another one, Peter, with 7% yield forecast this year, FY16, rising to 8% fully franked in FY17.
A company like GUD, does it sometimes suffer because people do associate it with Sunbeam and they think, well, the dollar's going down, they're importing products from overseas? Does the market sometimes, do you think, misread that company?
Well, it's been a boring company, but when it's been known of by investors, Peter, they have tended to misread it. But the story is definitely one of greater earnings stability being delivered by the big move into automotive aftermarket products, which is the BWI business is a very good one, and as I say, it's now going to generate the lion's share of their earnings, so they should be a bit more stable than they have been.
Tell us about Murray Goulburn, mate. Because they're an unusual, they're a unit trust. Is there a franking credit issue there?
They're offering a fully franked yield, the MG Unit Trust, and what's going on with it is there have been earnings and dividend downgrades on the stock, Peter, because the dairy business is an agricultural business and is prone to those fluctuations. But as I said before, that just the market opportunity with China and the delivery of the free trade agreement with China, MG Unit Trust is a business that you can see a clear path for earnings growth, because that growing market to our north and also the actual products they're shipping off there are becoming the proportion of value added as opposed to just shipping it off is growing all the time.
Yeah, and also, did they recently get a big kick along from Wesfarmers at Bega's expense?
Well, look, Bega is another one that will ultimately benefit from that China market as well. And look, so many of our companies in that area and companies in general, the free trade agreement with China will, we haven't even wrapped our heads fully around the benefit it's going to provide for Australian companies in general, Peter, but it's certainly going to provide benefits for our milk companies. I mean, not even listed, but Norco, which is the North Coast of New South Wales cooperative, which has moved into Queensland and signed up growers there. That's a 100-year-old business, Peter, and that is flying fresh milk into Shanghai 7 days from the paddock in Australia to the supermarket in Shanghai. And when you think of the fact that the Chinese have predominantly known milk in the supermarkets as UHT, to have fresh milk, and they are still able to call it fresh milk within 7 days, it's a game changer for the Australian industry.
Yeah, exactly. James, thanks for joining us on the show.
Thank you, Peter.
That's James Dunn. As I say, he wrote a story in the Switzer Super Report and he outpointed me. More people read his than mine. And that was the reason why I wanted to share some of those interesting companies with you. Now, after the break, we'll be talking to the CEO of Aussie Home Loans, James Simon.